What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release our new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings, leap trades, whatever you want to call them. So if you want a deeper dive into exactly how we set up our charts to get those levels, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. We got a couple of videos that will dive deeper into that for you. And also, if you're not familiar with the STRAT, oops, I'm sorry, I got the wrong screen up. Go ahead and check out the link in the description to this video. There's a link to a free quick reference PDF guide. Gives you the basics for the STRAT, which is the where our charting and trading method starts. Very simple way to read price action, but very detailed as well. So make sure you check that out if you haven't already. And I encourage you to watch the full video. We go over our triggers and targets for trades ranging from the lower time frames to higher time frames. So we go through a lot of pretty good insight. So let's take a look at the agenda for today's video. Let's go ahead and there we go. First, we're going to recap the price action from today, Monday, March 16th. Then we'll zoom out like we always do, take a look at the week, month, quarter, and year price action before we zoom back in to set what we call the 4-hour markers and the triggers and targets for Tuesday, March 17th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's get back to the chart that we started out on. And, today was... for scalpers, it was probably a great day. For range traders, it was a great day. Definitely no trend was set other than on some, really small time frames. And we were kind of, the proven and repeatable strategy was a little negated today, right? In the sense that we opened above previous high day, right? So price level 1 is our opening print, first traded price of the day. So we're above previous high day and we're right at overnight high. So, the proven and repeatable strategy that we use is we look for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day, or look for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. So yes, we've got higher lows at or above opening print, but we're already above previous high day and we're right at overnight high. So those are the targets for that particular strategy. So today was one of those days that, from that perspective, looking at that strategy, you had to be a lot more patient. If you wanted to and put the screen time in, you could go to the lower time frames. But basically today just traded within the gap that was established last Wednesday, right? So these blue lines, if we were to scrunch this up, would make a solid box. I don't know why Thinkorswim does this. There we go. But yeah, basically that represents the gap from a couple of from last Wednesday. And so immediately, right, we just shot straight up, closed the gap, rejected the top of the gap, and then we got a higher low. So we took a shot at this one, took the higher low here. Here when it made this a higher low, when this breached 2 up or went 2 up to lock this 2 down in as a higher low, we went and took calls. But you can see we popped up, almost had a 2 down, but inside candle tried to pop up again, tried to pop up one more time, but essentially just made a lower high. So once we came down and made this lower high right here, once the candle came down below the 2 up to lock this 2 up in as a lower high, we went ahead and stopped out. So it took a small loss from up here to down here. Not too big of a deal, especially if you keep everything short in terms of losses, then it's easier to let those winners run. So we had the lower high. You could have added, taken some additional risk and taken the lower high here, pushed down for this, I guess it made more of a broadening formation here, and try and take it back down to opening print. We didn't really want to do that. Let's show you why. If we go to the QQQ internals, come on now, there we go. You can see the tick opened in trend higher zone, came down, bounced off of zero line a couple of times, went back up to trend higher zone. Vol QD was above zero line and pushing up towards trend higher zone all morning. ADQD was in trend higher zone all morning as well, and although it was pulling down a bit at some points, it's still in trend higher zone, right? This was just the upper range of the trend higher zone. We're still above that the entry point of the trend higher zone. So from that perspective, it was a little tough to try and go into grabbing puts here. So we stayed out of the puts, waited till we had contact with that opening print again. And if we go to the 15 minute, there we go. We make this larger. Here is the 15 minute, and there is a higher low. So we went ahead, and once we went 2 up here to lock this in as a higher low, we went ahead and entered calls here, but we had a very tight leash on these because by this point, if we go back to the internals, tick was actually kind of starting to go below zero line. And again, like we said, breadth or ADQD was starting to go down again as well. So you can see it here and here as well. So although money kept coming into the market, into the QQQ, it wasn't being spread out, it was still being spread out because we were in trend higher zone, but it started to go into just not be as so spread out. We'll say it like that. The money wasn't so spread out as it came in throughout the day, which means the breadth was dropping, right? So it was just going into specific, tickers or, sections of QQQ. So, we got a lot of more playing around the zero line here. Again, breadth going down. So, we wanted to have a tight leash on that, on the call here. Obviously came up and started to just flatten out at the top of this, towards the top of the gap that had already closed, but we weren't even making a higher high. So as soon as we went 2 down on this candle, we went ahead and sold our position there. And just kind of sat and watched the rest of the day because it wasn't a day that was very conducive to our type of trading. Now, if we wanted to get down there and back in the 5 minute, 1 minute, it probably, we probably could have caught some moves, but, just kind of let some days, the best trade is to not trade. So for us, we just didn't put anything else out there. Now, because we had the big push overnight and back into... let's actually just make this. How should we do this? Go to here. Make this a lot smaller. Actually, let's try the 1 hour. There we go. So, we can see obviously we closed down here on Friday. Oh, let me make this way bigger for people on phone. There we go. So we closed down here on Friday. Obviously, slight gap up by pennies in the day, but basically all the push was overnight. So you had a lot of I guess overhead inventory because we couldn't continue to push up. It just became kind of like a shelf, and we're back in the mini range that we talked about before. If we just make this a little easier visually, we're kind of getting towards the top of that range, but not quite there yet. So we got to see, here we went, popped up, look above, failed back down, bounced off, but then failed, then fail, look below and fail, look above and fail, look above. Well, didn't quite look above and fail, but tried to fail, but popped back up, but then finally failed back down. We just keep going from the top of the range to the bottom of the range. This last time didn't go really out of the range as much. Now some could say, the range should be here, and Thursday, Friday was a look below and fail. It's perfectly reasonable to think as well, but at this point we went back to the top of the range. So now, we're still stuck in the same situation. If we pop up above, do we get some type of meaningful higher low above the range to continue us back up into the larger range overall, right? Or do we hit the top of that range and go back to the bottom of the range, right? That's the question at this point. And just for that fact, we kept the runner that we left from Friday. Again, it's a runner for a reason, right? We got our profits on Thursday and Friday, so we're just gonna see what happens today. Kind of, petering out at the end of the day and fading away at the end of the day. It really kind of makes you think, right? We couldn't even get to the top of the range again, right? Maybe we should lower the range a little bit. Maybe the range is here, and maybe we are at the top of the range. Well, if that's the case, then we should expect to be back down here tomorrow if the same thing is going to follow suit. Maybe we get another look above and fail, but we got to see. Let's see, closed at 53.69. Right now we're at 53.80 in after hours, so an hour after the market is closed. We got a lot of overnight to go, but so far it doesn't really, we're not pushing back to the previous high or to the day's highs, right? So we just got to be patient, right? The best thing to do right now is make your play during the day and just close everything out at the end of the day, unless you have a runner that you want to let run or something of that nature. But as far as like swinging calls for April or even puts for April right now, I wouldn't suggest either one unless you're willing to day trade it or maybe just overnight swing it, right? Because with this type of action, you're not going to stay in a swing too long. Otherwise your theta's going to start eating you up, right? With no price action and really in either direction, right? So patience is going to be the key. That's what we've got from kind of a zoomed in perspective, how we played today. Now, one thing we will say is, let's go to the right chart here. There we go. We did have a slight, a downtrend that started a little bit on that 1 hour, right? We got this high and then lower high, but we didn't get that lower low before getting a higher high. So you want to say that there's kind of a bearish lean to this, but technically here's a broadening formation on the 1 hour, right? So we have this broadening formation that we're in still on the 1 hour, and then even in a smaller broadening formation here, right? Oops. Broadening formation here, right? So we just got to exercise patience. Again, it's just the name of the game right now. I wish I could say more, but there's not really much more to say. If we go to the 4 hour, all right, we did get a higher low here, right? So we had lower high, but then a higher low. So that's consolidation, and then it looks like it popped out of the consolidation, but we haven't made a higher high. So we've made a higher high from here, but in this particular range, we haven't made the higher high or even got back to that high. So it remains to be seen. You would think, with this price action overnight, the first 4 hour, we would get that continuation up through the top of the range. But look at this red 3, bearish engulfing candle right here for the second 4 hour candle of today's price action. That doesn't seem very bullish to me, or even speak to really getting back to the top of this range. So that's why other than the one put swing that we've or runner that we've let run swing, haven't really done much, right? On the day, we did get a higher low here 2 days ago, right? Friday went 2 up, even though it was an inverted hammer. But last Thursday is going to be that higher low here. Remember, it's coming from just a slightly higher high. There's this high, lower low to a higher high, right? So we've got this broadening formation that we're in down here. So yes, we've got the higher low, but we've got to go on to make that higher high. And even if we make that higher high, we've got to get a significant higher high or some type of higher low here then to continue the push up before we can really put any confidence in the fact that we're breaking out of this broadening formation, right? Until then, we're just making higher highs and lower lows, expanding the range as we continue to move through time, right? So just keep that in mind. Again, higher low on the day, but if tomorrow goes 2 down, then we've just made a lower high and we're just consolidating. So just keep all that in mind. Let's see. Yeah, that's pretty much what we've got from everything from the day chart and down. Trying to think. I feel like I'm missing something. Okay. I'll just leave it at that. Yeah, that's what we've got from the day and down. Let's zoom out a little bit more and take a look at the week. we go. Let's get a cleaner chart here. There we go. So last week was a 2 down, but it was a failed from the sense that it was a green 2 down, right? It closed higher than what it opened at. So, kind of neutral in that stance, because although it was failed, it wasn't like it was a hammer or anything. It was still more of an inverted hammer than anything else, and it went 2 down. So, got to keep that in mind. Even if we do go 2 up on the week, there is the opportunity for the lower high, and since we're coming from a lower low, if we go lower high and then if we go lower high somewhere around here and then can come back down and make the lower low, now we're in a downtrend on the week, right? Currently we're in this broadening formation. Yes, we did make a lower low, but we're coming from a higher high, so just broadening the price action out, moving sideways through time. But like I said, if we push up, if this week goes 2 up but can't clear, and market makers expected to move high, or last month's 50% level, and then next week we end up going 2 down, now we've made a lower high, and it's just got to keep an eye out for that lower low, because we got the gap that can act as a magnet here. And if that does, that starts to trigger things on the higher on the month time frame, right? So from the week perspective, we want to, if you're a bull, you want to see that continued push up, right? Let this gap here at 57, 58 act as a magnet to bring you up, and try and get follow through from there. The market makers don't expect getting much further past that if we do get up there this week, but market makers are only right about 70-80% of the time. There's always a chance that we can go above where they expect, or below, right? It could get down here too, but from a bull's perspective, or even if you're just neutral on things and want to see more range, then you would want to see that 2 up continue to go up and make a higher high, and just to continue that expanding that broadening formation, right? But if you're a bear, you're looking for that lower high somewhere up in here, right? But again, patience is the key, and we want to bring that back around to the month. Let's get those lines off there. If we look at the month, we've already gone 2 up, 2 down. We reached that, but we did breach below that, or we reached magnitude and went past that, which then triggered this one combo 2 up, 2 down. So we've been able to bounce from that area here, but if we do continue to slide back down, and if we get below the what was this, 45.08 level, then we've got to really look out, because the $28 level would be on the table at that point. If you were looking at that from the STRAT perspective, it'd be perfectly reasonable to see a drop to 28. We've got a lot of economic, geopolitical data. Geopolitical news. We've got some economic data that's going to start to roll out again. This week's a little bit quieter, but the quarter's coming to an end, so we'll see how things go. The Fed has a meeting as well. I believe that's this Wednesday, actually. So, a lot to be seen, and there's a lot to play for, right? Because if we end up just, going 2 down, maybe this goes failed to where we go a green 2 down. Even if we don't go green 2 down, if it still finishes somewhat in like a hammer pattern, then we could just be making a higher low on the month to continue on up, making that higher high. And that uptrend on the month chart. So patience is the name of the game here. All right, there's not a whole lot I could tell you. Sorry if it's boring, but from a higher time frame perspective, that's really what it is, right? Looking at the quarter, we already ran this 1 combo 2 down, combo 2 up, right? The magnitude was up here at 70. We ran that STRAT, so that's complete. Not much more to do from the quarter perspective, right? We came from a lower low and made a higher high. So on the quarter chart, we just made a broadening formation. So even if we go 2 down next quarter, it's not necessarily the end of the world. Now leaves a lot open. We could come back down just to make equal high, or even equal low, or even make a lower low to expand the price action even more. But that's going to take a while to take shape, if it does take shape. So keeping an eye on the week and the month are really key here, and just play the daily volatility, right? As of right now, we're ranging. Play that range, and if you're not a great range trader, you're a better trend trader or something like that, just wait, right? every year there's time for trend traders. Every year there's time for range traders, right? That's just the nature of price action, right? There's expansion to contraction to expansion, and during that contraction time, those range traders can win, and then during expansion, those trend traders can win, whether it's expansion to the upside or to the downside, right? So, just be patient. Sometimes the best play is to not make a play at all and just wait for your type of setup to come around, right? So yeah, that's what we've got from the quarter and the year, right? Last year was 2 down. This year we already went 2 up, making a 2 down, 2 up reversal, and it's reached magnitude up here at the 70.08 as well. So, basically said what I need to say. That's, you got to keep your eye on the smaller time frames, right? Let's go ahead and look at the 5-minute time frame again and look at our approach for tomorrow. Here we go. On the chart, we have what we call our 4-hour markers. That is previous high a day, overnight high, overnight low, and previous low a day. All right. There's one other 4-hour marker, opening print, but of course we can't put that on the chart until price is opened. So, won't put that out here right now. Let's just say for illustration purposes, let's just say overnight we press up and we get an overnight high up there. Overnight low stays around here, and let's just say we open back up basically where the week opened, right? So this was this red dashed line here is the week's opening print, right? This is where Monday's price action opened. I always want to keep track of that so you know whether you're red or green on the week, and you can see obviously without having to look at any time frame indicators like up here or anything like that, you can see we're below the week's opening print, so the week has got to be red. All right, so if we we already adjusted overnight high. All right, so let's just say we open up somewhere around the same area, right? Same type of thing from a scalping perspective, very early in the morning or an early entry into a day trade perspective. We're just looking for the proven repeatable strategy, right? Looking for higher lows at or above opening print. If we get higher lows at or above opening print, then we want to get into calls and we want to target overnight high and previous high a day. All right, those are the targets for this particular strategy. If we open and we push down, maybe we get a bounce off of overnight low, but then ultimately get a lower high at or below opening print, then we want to look to get into puts, and we want to target overnight low and previous low a day. Right? Very simple, proven, repeatable. Keep your losses short, and once you reach the ultimate target for that move, let a runner run. Right? That you should have some type of momentum, unless it's some type of just a range day like we had today. You don't really need to worry about hitting that particular level and coming back into price action. If you got that momentum, let a runner run, right? Or multiple runners run, depending on how many contracts you have. But yeah, that's what we have for our proven and repeatable strategy, right? So let's actually zoom out a little bit more and talk about how we'll approach these day trades. Excuse me if I can get the right chart. There we go. So here we have the 4-hour time frame, and this is again more for a full day trade, possibly overnight swing. And we can see that we had a 2 up that first 4 hour of Monday, and then we had a bearish engulfing or a red 3 for the second 4-hour candle. So not a lot to glean from here other than the fact that we definitely faded off at the end of the day. But we're just stuck in the middle of this range that we've been in. If we count this down here as a kind of a look below and fail back up into this range, then that's what that is down here. But for the most part, all the trading has been done between around 50.76 and 57.78. So about $7, worth of range right here when we're smack in the middle of it at the end of the day today. So, if we get price action to the downside, then that would obviously be followed through, but we need to watch how that first 4-hour candle would close, right? If we get a 3 and then a 2 down hammer, it could just be indicating a 3, 2 down, 2 up reversal back to the highs of the 3. But if we get that 3 and a 2 down, a solid 2 down, inverted hammer 2 down, then we should probably be seeing the bottom of the range again. Same in reverse, right, to the upside. If we get a 2 up, but it's an inverted hammer or red 2 up, or barely getting above the high of Monday, then there could be the possibility of a 3-2 up, 2 down reversal back to the bottom of the 3, which has some decent range as well. All right, so keep that in mind. We're right at the week's opening print level, essentially. 54.96 is where we opened up. So we've got to get some price movement from there, and even if we get it from here, it's probably going to only be to the top of this micro range that we're in. You've really got to wait for some type of higher low above the range or lower high below the range for any more decisive price movement outside of this little $7 range that we've been in, right? So keep that in mind for the 4 hour. Even if we go 2 up, we could be setting up a 3-2 up, 2 down, or if we go 2 down, we could be setting up a 3-2 down, 2 up, right? Just keep that in mind. From the day perspective, like we talked about a little bit earlier in the channel, we made a higher low here on the day, but we haven't made any type of higher high yet. So we haven't really created an uptrend or anything yet. Again, the making a higher high would, yes, poke us out of this little range that we've been in, but for more confidence on a longer swing, we really want to see price action, maybe even getting up to market makers expected move high, or even last month's 50% level, then some type of pullback, and then some type of higher low at or above the month's opening print to get us pushing back to the upside, right? At the same time, if we get that 2 down tomorrow, then we've come from a higher low, but we've just made a lower high. Prices consolidating, and maybe look for tighter price action as we continue to move sideways. But at some point, after it coils up, it's got to pop one way or the other. So the name of the game is just continuing to be patient, right? We've already been over the week and month and quarter charts. So let's go to the notes here, right? So for Tuesday, March 17th, there will be 201 trading days left in 2026. And we know the close price on Monday, March 16th was 53.69. We know that the week is red, right? We opened at 54.06, closed at 53.69. So in order to flip the week green, we've got to get above 54.06. Same with the month; it is red as well. But to get the month green, we've got to get all the way up to 58.15. I say all the way; it's just further than flipping the week green. But the month and quarter are still green. We'd have to get down to that 45.13 level in order for those to flip red. But right now we've got we don't have any continuity between the time frames, right? Red, red, green, green. So, expect more chop, expect more range trading, right? If you watch the weekend video, the market makers expected move for this week is plus or minus $8.82, giving us an expected range of 59.54 to 41.90. And we know that there's only one more gap above us now that we knocked that one out today from Wednesday, up there at that 57.78 to 58.05 level. Got quite a few gaps to the downside. That's why we keep those in our notes. Got to remember where those are at and where price could be falling to at certain points. So always keep those in mind. And we know from a scalping, early morning scalping perspective or early entry into a day trade, we're looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. Or if we get lower highs at or below opening print, then we want to get into puts targeting overnight low and previous low a day. All right, we just talked about on the 4 hour, there is the potential for the 3-2 down, which could reverse into a 3-2 down, 2 up. So you want to really watch how that 2 down closes. If we do go 2 down in that first 4 hour candle, that 2 down would trigger at 53.01, and we've got targets of 51.91 and 50.76 out here for you. So the upside, if we get that 3-2 up, that would trigger at 55.68, and they would technically trigger this one combo 2 down. Actually, it would be combo 2 up at this point, right? That would trigger at 55.68 as well. Magnitude for that move is 57.78, which is the top of the range. So if we have another choppy day, even if it's just a slow grind to the upside, there may only be a target of 56.92. But that one combo 2 down, combo 2 up, the ultimate magnitude for that move is 57.78. And then not too far above it, we've got that 58.05 gap close, right? On the day chart, we talked about if we go 2 down, that gives us a lower high, but we're coming from a higher low. So consolidation of price, that 2 down would trigger at 53.01. The magnitude for that move would be 50.04. We know it may be tough to kind of get down there with this choppy price action that we're having during the day. So We may only get down to that 51.16 level, but the ultimate magnitude for that 2 up 2 down move is 50.04, and should we get to that 50.04 and keep going, we've got some extended targets there for you as well. On the day, if we go to the upside, that gives us that 1 2 down 2 combo 2 up, triggering at 55.68, magnitude being 57.78. So a couple of dollars there worth of price action. But again, if it's a slow grind, watch for price action to, stall out, possibly go sideways, maybe even reject at 56.92, right? If we do get to magnitude of that 1 2 down combo 2 up and continue running, we've got the extended target of 58.15 out here for you, just above that gap close. It is actually the month's flip level, right? So it turns the month green at 58.15. So that's why we got that target there. We talked about on the week, we're still an inside week. So if we do go 2 down, 2 down, we've got to get down past 44.53. And then if we're going to go 2 down, 2 up, then we got to get up to 62.82. So basically in the middle of those two levels at this point. So once we start to, make a meaningful move in one of those directions, then we'll talk a little bit more about which one may trigger. But for right now, those are your triggers, right? We already talked about on the month, we went 2 up, 2 down. That actually reached strat completion there at 45.08, but went below 45.08, which triggered this 1 combo 2 up, 2 down, which does have a magnitude all the way down there at 28.12. So we do have some intermediate price levels here for you where price could either bounce or go sideways should we continue this 1 combo 2 up, 2 down. Right, we've got about half a month left to complete that move. So just if we do trigger that again, just watch. We could have a slow and steady bleed instead of the rug just being pulled out from under us. So if we do get that slow, steady bleed, just watch these levels. At the same time, if we're going to go bullish engulfing candle or green 3 on the month, we got to get up to that 72.36 level. So again, a long ways away. We'll talk about that a little bit more if we approach it. But right now, we're just trying to see how the month is going to continue. Again, we got half of the month left. Quarter, we're in the last month of the quarter, last half of the last month of the quarter. So should have something new to trigger here pretty soon on the quarter time frame. But like we talked about earlier, we already ran the 1 combo 2 down, combo 2 up. Just like on the year, we ran the 2 down, 2 up. So not much else to say from those two time frames. We just got to wait for the week and the month to give us something here, right? In the meantime, just play that 4-hour and daily time frame volatility and range, and just try and do your best out there, right? But that'll be it for today's video. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-day chart. Really tried to stuff in as much information as possible without taking up too much of your time. So we do appreciate you joining. If you made it this far, thumbs up goes a long way. So we would really appreciate it if you give us this channel a thumbs up or even a share if you can think of somebody who might benefit from either this full strategy or parts of this strategy. Go ahead and send it on to them and see what they think. But just tried to put out some more information and help traders trade in this rangy trading climate. It's not always the easiest to trade in. Trends are definitely easier to trade, but if you can establish a few repeatable strategies that work within that range, and just nick away at profits here and there and wait for that trend to kick off again, then you should be all right. But that's it for today's video. We'll end it like we normally do. If you're watching this Monday night, we hope you get some good rest tonight, wake up refreshed tomorrow. And if you're watching this on Tuesday or Tuesday morning or the day, whichever one you're watching, hope you got some good rest last night and woke up refreshed this morning, ready to trade. And we look forward to getting out there and trading with you.